This is Golden Years, a roadmap to navigate retirement with Mark Cordner, the podcast.
You know, the swings on Wall Street, they've been kind of intense recently, and a lot of folks out there are starting to panic. But financial author Robert Prechter tells Fox Business that there's really no need. Listen to this.
To me, the key is to not worry too much about the day by day. You can see once the bear bites how much it can take away in a short period of time. The stock market has been the most overpriced and overowned it has ever been. So we're going to very calmly just sit and wait. And when everything changes and we see indicators on a long-term basis that are back at least in neutral, if not bullish, then we'll change our minds. But right now, we just say stay in your bunker and watch the show. So
a couple things here. He says stay in your bunker and watch the show. I think that's real easy when it's not your money you're seeing fluctuating left and right in the market. I'm not one to sit down and just watch my money deplete, right? I can't just do the whole don't panic, stay the course, it'll come back. What are you telling your clients?
Well, I think he's got half of the story right, and that is that true investors are not investing for the hour or for the day or even the month. They're really investing for the year and for the decade. And so we do have to think long-term when we're looking at market-based investments. But this idea of letting the bear take its bite and, see how we fare afterwards, I'm not real crazy about that, because what retirees and pre-retirees, the folks we're working with, don't have anymore is time. And that's time to recover. When we're 20, we can think a lot differently than we can when we're 60. The time horizon is just shorter. We start to see that finish line coming into play. And so we are strong advocates of preservation, at least of some assets. So, I talk in terms of a two-pocket strategy. Part of our money can be in the market, and it should be there for long-term growth, hopefully to outpace inflation. But part of our money we really need to preserve, and we've got to keep it safe in principal-protected accounts, and we need to be arranging income streams that we can't outlive, so we've got that contractual assurance that, we can sleep well at night. Because at the end of the day, that's the concern of most people. If people I work with have been successful, at the end of the day, they don't want to just roll the dice, as it were. They've worked too hard. So we've got to think differently about that with time in mind. And so the caution we give people is to act early. Don't wait for the bear to bite us, as gentleman said. We can't just take whatever losses life's going to bring to us. If we can do things preventatively, we want to do that to preserve the assets we have. And so if folks don't have certainty about this, we'd say, come visit with us, because we can show you how to build structures into your retirement plan so that we can safeguard your hard-earned savings. Because at the end of the day, we don't want to run out of money before we run out of time. That's really what it boils down to. That money has got to last. That's the number one fear people have, is running out of money. And that's the number one thing that we do, is show them how not to run out of money. So come visit with us.
Now, Mark, you've been doing this for a long, long time, decades, and your door is always open, of course, for, folks to come in for that first time, or maybe even get that second opinion on their retirement plan that maybe somebody else set up. So that leads me to think, okay, when someone sits down with you, this happens all the time, and they say, oh my gosh, Mark, no one's ever told me this. You make it so easy. What do I have to do? I want you to do all my planning. What happens? So that transition of going from the advisor that so-and-so recommended to you now to a new advisor can seem overwhelming and difficult. How do you make that process easy?
Well, first off, we want to find any good that the former advisor did. We don't want it to be a negative experience. Absolutely, we very commonly hear that the things we teach are different than what they've heard elsewhere. And I think that's primarily because most of the financial community is focusing entirely on, trying to get you sexy returns. Their basic pitch is, whatever you're earning, we can earn you 1 or 2% more. And with all due respect, I think that's the wrong conversation to be having, because at the end of the day, it really doesn't matter if you have 1 or 2% greater rate of return if it's all lost because people didn't put safety structures in place. If they didn't deal with questions like, how do we avoid increasing taxes in the future? How do we deal with inflation? How do we deal with market setbacks? And I think the biggest one is healthcare. How do we deal with that time bomb known as long-term care? 97% of Americans haven't addressed that, which means by default, they're agreeing to pay whatever life brings to them. And that is what destroys people's retirement plan. It's a time bomb. And so I think most advisors, particularly those who have come out of the brokerage communities, they've just been raised to think in terms of managing money, and they're not risk managers. And I think retirement's really about risk management. So it's very, very, very common. People come to our classes and visit with us and say, oh my heavens, we hadn't heard this before. I wish we'd heard it 20 years ago. How do we come to you without it being a painful experience? And so typically we'll help them. We'll draft a little letter that basically thanks the prior advisor for all the good that they did, and just let them know that we're going in a new direction. We've learned some things and we're going in a new direction. And so we try to keep it as positive as possible. I often tell the story that during COVID, I picked up what they call long COVID. I've been dealing with the effects of that for the last 4 years, and it almost killed me in 2022. And long story short was I had to get a new doctor. I had a wonderful doctor, but he just was not hearing me. And that's a complaint we often hear from people in the financial community, is that their former advisor just wasn't hearing them. Well, my doctor wasn't hearing me, and I almost died as a result. I had a miserable 2022. They didn't think I'd make it out. And we finally found a homeopathic doctor with alternative treatments who I credit as having saved my life. So, God bless Terry Fowl, for anyone who's listening, is a great homeopathic doctor. But sometimes we just have to make changes. If you're in that boat where you're questioning if you're getting value from your current advisor, maybe you want a second opinion, come visit with us. We're not going to charge you for that. We'll listen to you. We'll share some ideas, and if you feel like it's worth pursuing, then we'll take those next steps. But that's a complimentary consultation, so just come visit with us.
You mentioned a good thing here about, you sit there and you listen to what somebody has to say. This is their opportunity to come in and almost vent about what their concerns are, what their wants, needs, desires, fears, what have you. And, Mark, you really sit there and you take it in, and you're mentally making notes maybe about some things they brought up, some issues. But, when you come and you sit down with Mark, you're not just a number, right? I mean, he gets to know you. You become a friend of Golden Years. You become a friend of Mark's. And also, here's the deal. This is where you're going to sit down and talk about your family and your friends. And I want to take, my grandson or granddaughter here, and you're going to get to know Mark and his family. He wants to get to know you. This is not a transactional relationship. And let's face it, we've all had them. I don't care if you're at the car dealership, or maybe you walk into a store and you're looking for a certain item, and you can tell the person talking to you doesn't really care what your concerns are, doesn't really care that you have questions. They're just there to kind of, walk you through whatever it is and move on to the next one. That's not the experience you're going to get when you sit down with Mark.
Yeah, that's very true. In fact, some people are not a good fit for us because they're not willing to do the work. And the work is two ways. I mean, I certainly have to work to earn people's trust and show them the results of my 30 plus years of studying these issues and helping people. But the flip side is they also have to put some mental energy into this. At the end of the day, to me, their money is sacred. And so we have to, it represents their life energy, their years of sacrifice. We have to protect that. But sometimes people just aren't willing to do the mental work, or they want to take the first thing that their neighbor or brother-in-law says and run with that. And I don't consider them particularly serious. And I don't mean to sound negative, but not everyone's a good fit. It's a two-way interview, as it were. And we love our clients because they're positive, and I always like to say that the criteria to work with us is not financial. The criteria to work with us is they have to be positive, optimistic about their future. In other words, they have to see a brighter future than their past, and they have to be teachable. If they're humble enough to be teachable and they're optimistic about their future, then we can work with them. I'm not looking for a minimum dollar value. Now, granted, most of our clients are, they got somewhere between 250 to $1 million plus in investable assets, but that's not a minimum number. I work with teenagers, frankly, that are putting $25 a month away, and they're the grandchildren of clients, or they're just kids of our clients who want to start early, and that's very satisfying. Are people serious about their future? They want a brighter future than their past. And if that's the case and they're teachable, we want to work with them. So we say, come visit with us.
Investment advisory services offered through Golden Years Financial LLC, a registered investment advisory firm. Insurance is offered through Golden Years Insurance Services. These firms do not provide legal or tax advice. Consult your own legal and tax advisors before taking actions that may have tax implications. Investing in securities involves risk, including the potential loss of principal. Insurance contracts principal protection is based on the claim-paying ability of the respective insurer. None of the information contained on this website shall constitute an offer to sell or solicit to buy a security or insurance product. The information and opinions contained on this site or requested from this site are provided by third parties believed to be reliable, but accuracy and completeness cannot be guaranteed. They are provided for informational purposes only and are not a solicitation to buy or sell any of the products mentioned. Any media logos and/or trademarks contained herein are the property of their respective owners, and no endorsement by those owners of Mark Cordner, Golden Years Financial, or Golden Years Insurance is stated or implied.